Welcome back. Now, you're probably asking yourself, why do I even need to adapt to these changes? I've built a successful client bank, I manage a lot of client assets, and my wealth management business is absolutely thriving. Now, these are all true, until now. In our rapidly evolving landscape, adaptation is not just necessary, it's pivotal to the success and survival of your business. AI, machine learning, automation, blockchain, these aren't just innovations that we can choose to adopt, they're the foundation of the new norm. They're reshaping wealth and investment management, rendering adaptation a necessity, not just an option. Now, if you're not ahead of this curve, guess what? You'll be firmly behind it. Now, the first driver for adaptation comes from our clients. As I mentioned in the last lesson, digital savvy generations, millennials and Gen Z, they're demanding more than just excellent returns. They desire investments that align with their values, personalized experiences, and digital convenience. These tech-savvy clients, they expect seamless and intuitive digital interactions. Now, if we fail to adapt to their changing needs and offer a modern, digital customer experience, we risk losing them to competitors who will adopt this technology. Now, secondly, technology is advancing at an unprecedented pace. Machine learning algorithms, they're growing to be more refined, and AI is becoming more sophisticated, with automation increasing in its own efficiency. Adopting these technologies, they can dramatically improve our businesses. They can even open new avenues for growth by providing us with the insights we couldn't access otherwise. However, because of this rapid rate of change within technology, if we don't get ahead of the curve now, we're going to be firmly left behind and struggling to recover forever. Failing to adapt to these advancements, it doesn't just mean missing out on these benefits, it can be detrimental to our survival. As these technologies become the industry standard, businesses that don't adapt risk becoming obsolete. Now, your processes may become inefficient, your advice may fall behind, and you may lose that key competitive edge. Thirdly, regulatory bodies are also evolving to accommodate these new technologies into everyday practice. Once adopted, it's important that further adaptation takes place in order to stay compliant, maintain your reputation, and ultimately avoid fines and penalties. I know it sounds severe, but AI is going to set the new standard for what regulatory bodies expect from regulated businesses. If you're not able to cope with this pace, well, I've already mentioned the consequences. Now, lastly, the economic environment is increasingly unpredictable. Market volatility, geopolitical uncertainties, and even global pandemics, they're challenging our traditional strategies. Adapting our approaches is key to navigating these uncertainties, mitigating risks, and seizing opportunities. AI is having a direct impact on areas even in the stock market. Take Nvidia, for example, a fantastic company and stock. Since October 2022 to the time of recording this in July 2023, its stock price has risen 4 times and is up 624% in just 5 years. And why? Well, because of AI tools and resources it's developing every day and introducing to the market. There's clearly a demand for this. Now, adapting to these changes may seem daunting. It involves learning new skills, changing long-established ways of working, and really stepping out of your comfort zones. But let me assure you that the benefits far outweigh the challenges. Adapting to these changes equips us to serve our clients better, streamline our operations, and lead businesses to even greater heights. It enables us to turn disruption into innovation and challenges into growth opportunities. It empowers us not just to survive, but thrive amidst change. Now, wealth and investment management firms worldwide are already recognizing the profound potential of AI and automation. According to a survey done by Accenture, most wealth managers, they acknowledge that adopting AI can significantly improve their financial performance over the next 2 to 3 years. However, the same survey revealed a significant obstacle. More than 80% of firms are stuck in the proof of concept phase, with AI initiatives being siloed within specific departments or teams, which presents an opportunity for you to get ahead of the curve, being perhaps a smaller or medium-sized firm that can be a lot more dynamic in its adoption and approach. Again, let's be clear, AI is not just about operational efficiency or cost reduction either. AI can provide an array of transformative opportunities that extend well beyond these benefits. Now let's take Deloitte, for example, and their latest global report, which outlines 4 transformative pillars of AI implementation within wealth and investment management firms: generating alpha, enhancing operational efficiency, improving product and content distribution, and managing risk. Now let's look at the first pillar, for example, generating alpha. We hear about this phrase a lot. Now it's about enhancing investment performance. So where does AI come in? Well, by harnessing AI, we can extract valuable insights from structured and unstructured data more swiftly and accurately, thus enhancing our investment strategies and generating superior returns for clients. This isn't just a distant concept in the future either, it's a competitive advantage that's within our grasp today. Now, enhancing operational efficiency, as mentioned before, that's the second pillar. And it's about streamlining our operations day to day. AI and automation can automate routine tasks, it can reduce errors and speed up processes, freeing our teams to focus on value-added tasks like building client relationships and real strategic decision making within your business and with your clients and wider operations as well. Now the third pillar is improving content distribution and product distribution to clients, and it's about delivering personalized advice and service to our clients. Now AI can help us understand our clients better. It can predict their needs and tailor our offerings to match their unique goals and preferences. Now this goes a long way in deepening client relationships and fostering client loyalty, as I'm sure you can imagine. Now the final pillar to all of this is managing risk, and it's about improving our risk management capabilities. AI can enhance our risk profiling, it can detect anomalies and predict market movements, not to mention helping us navigate regulatory changes as mentioned before. This results in improved compliance, more informed decision making, and greater client trust. Now, integrating these insights into our previous discussion on adaptation, we can see that the adoption of AI and automation, well, it's not just about keeping up with the latest trends. It's about capitalizing on a transformative opportunity to serve our clients better, streamline our operations, and enhance our competitiveness. Now, in the upcoming lessons, we're going to explore AI technology in much more detail. We're going to talk about how to harness the power of these new technologies with implementable steps. And we're going to discuss these steps that we can take, the skills that we need, and how to drive change in our organization. So let's keep going.